Hello everyone. So today we are going to start a new topic, that is nothing but double entry system. So what is double entry system, sir? As accounting is as old as the usage of the money itself, till 13th century the accounting was primitive. The usage of the accounting was primitive. It was used only by a few people. But in 15th century, Dr. Fra Luca Pacioli, who is considered as the father of the accounting, had developed the accounting system and discovered double entry system. So now, what is double entry system, sir? Your double entry system is nothing but where your debit is equals to credit. Sir, what is a debit? Sir, debit is nothing but your debit balance should be equal to your credit balance. Sir, what need to be debited, what need to be credited? So to understand that, let's take a simple example and understand it in detail. Let's say we have Mr. A. Let's say we have Mr. A who started a business. Mr. A started a business. Let's assume it is nothing but a furniture business. Mr. A started a furniture business with a capital of 1 lakh. Mr. A started a furniture business with a capital of 1 lakh rupees, where he would be purchasing the wood and converting and he would be converting that wood into furniture. Yes or no? So now as he started the business, so after receiving the capital, the business would be purchasing the goods. Yes or no? And after purchasing the goods, for the purpose of converting the wood into furniture, they need to pay some wages to the workers. Yes or no? Let us assume the business is having a go down where they are supposed to pay some rent. Now let's take the purchases were 50,000 rupees, and let us assume they are paying 10,000 rupees towards wages and 5,000 rupees towards go down rent. So these are nothing but your expenses of 65,000 rupees, which is incurred for the purpose of converting the wood into furniture. Now, so let us assume this product which was converted from wood into furniture, let us assume this product was sold for 80,000 rupees. So after deducting the expenses which were incurred to convert the wood into product or furniture of 65,000 rupees, you would be left over with a amount of 15,000. This 15,000 is nothing but the profit of the business. Yes or no? So this 15,000 is nothing but the profit of the business. Now let's understand it in detail. So upon starting the business with a capital, the business, so who is giving the money? Mr. A is giving the money to the business. Yes or no? Mr. A is giving 1 lakh rupees of cash to the business. So in that case, the business would be receiving. So here the business is separate and the owner is separate. So now the business is separate and the owner is separate. So now as the business is receiving 1 lakh rupees of cash from Mr. A, as the business is receiving 1 lakh rupees of cash from Mr. A, simultaneously there would be a loan. There would be a loan of 1 lakh rupees, where the business need to pay this 1 lakh rupees to Mr. A in the near future. So that means upon receiving the capital in the form of cash, you are having two components. One is your cash, other one is your loan. Yes or no? So your cash is nothing but your asset. Cash is nothing but your asset. The loan which is in the form of capital. The loan which is in the form of capital is nothing but your liability. Sir, what is an asset? The asset is nothing but those resources which the business owns. Those resources which the business owns is called the asset. Sir, what is a liability? A liability is nothing but the present obligation which is expressed in terms of money. The present obligation which is expressed in terms of money, which is probably, which is supposedly to be paid in the near future, which is to be paid in the probable future in the form of either cash or in the form of goods or in the form of services. So that means in the near future, the business need to pay this 1 lakh rupees to Mr. A either in the form of cash or in the form of goods or in the form of service. So this liability is nothing but the present obligation which is expressed in terms of money, which is to be repaid in the probable future either in the form of cash or goods or services. Now, as asset is the first component into the business, the liability would be second component into the business. So what is the first component into the business? The asset is the first component into the business, and your second component is nothing but your liability. The expenses which you are incurring after receiving the cash into the business is nothing but your third component of the business, and after converting the wood into furniture, this sales is nothing but your fourth component. So how many components you are having? So you are having asset as a first component, your liability is nothing but a second component, and after receiving the cash, as you are incurring some expenses, this expenses is nothing but the third component of the business, and this sales is nothing but a fourth component into the business. So now let's take here, let us assume the elements of the business or the accounts, elements of accounts. What are the elements, sir? The components, these components are nothing but the elements of the accounting. So what is the first element, sir? The first element is nothing but your asset. What is the second element, sir? Your second element is nothing but your liability. Your third element is nothing but your expense, and the fourth element is your income. Now let us assume, let's come here. As asset is the first component into the business, now as asset is the first component into the business, it need to be recorded in the books of accounts, yes or no? As asset is the first component into the business, the asset need to be recorded in the books of accounts where it need to be recorded, where these components need to be recorded in the T account. So as these assets need to be recorded in the T account, as these assets or components are supposed to be recorded in the T account, this T account is divided into two sides, that is a debit side and the credit side. As these components need to be recorded in our T account, this T account is divided into debit side and credit side, that is your left hand side and right hand side. And as the asset is our first component and as it need to be recorded in our T account, it is recorded on the left hand side. As asset is the first component into the business and as it need to be recorded in our T account, it is recorded in our T account on the left hand side, which is nothing but a debit side. Which is a debit side. So that is the reason your assets would be having, a debit balance. Your assets would have debit balance because it is recorded on the left hand side of the T account as it is the first component. This is the logic behind your debits and credits which were segregated. Yes or no? Now, as a liability is the second component of the business, and as it need to be recorded in the books of accounts, that is nothing but in your T account. On which side it need to be recorded, sir? On which side? As a liability is the opposite of asset. As a liability is the opposite to asset. Yes or no? As liability is the opposite to asset, it need to be recorded on the opposite side of asset, which need to be recorded on the opposite side of the asset, which is nothing but your right hand side. This right hand side is nothing but your credit side. As a liability need to be recorded in the books of accounts, that is nothing but your T account. As a T account is having left hand side and right hand side, as a liability is opposite to your asset, so as it need to be recorded in the T account, it is recorded on the opposite side of the asset side. Opposite side of the asset side. Asset is having which side? Debit side. Yes or no? Debit balance. So it need to be recorded on the opposite side, means it need to be recorded on the right hand side, which is nothing but your credit side. This is the logic behind your debit and credit to your liability. Yes or no? Now let's continue. Let's say the business purchased another asset. Let's say the business purchased another asset. So we have purchased another asset. So upon purchasing another asset, your assets would be increased. Yes or no? Upon purchasing another asset, your assets would be increased, and upon purchasing another asset, it need to be recorded in the books of accounts. That means in your T accounts. If there is an increase in your assets account, as it need to be recorded in your T account, it is recorded on which side, sir? Same, debit side. So that means whenever there is an increase in the debit balance, it is having which balance? Debit balance. That means it need to be recorded on the debit side. Whenever a debit balance increases, your asset is nothing but your debit balance. Yes or no? Whenever the asset increases, it should be recorded on which side? Debit side. Let's say we sold some asset. That means whenever there is a decrease in the asset, let's say whenever there is a decrease in the asset, so increase, you are recording it on the same side, that is nothing but debit side. Whenever it decreases, it should be recorded on which side, sir? Credit side. So whenever there is a decrease in the debit balance, it should be recorded on the credit side. Okay, let's understand once more. As assets are recorded on the debit side, because it is the first component into the business, as it is recorded on the left hand side, so this is nothing but your assets would be having a debit balance. If asset increases, that means we are purchasing another asset. So upon purchasing the other asset, it should be recorded on which side, sir? Debit side, because the assets are having the debit balance. If increase in the asset, it should be recorded on the same side, that is nothing but your debit side. So that is the reason whenever there is an increase in the debit balance, it should be debited. It should be recorded on the debit side. Whenever there is a decrease in the asset side, or whenever there is a decrease in the debit balance, it should be recorded on the opposite side, that is nothing but your credit side, because we are having only two sides. One is debit side, other one is credit side. That's it. Let's continue. Liability. As a liability is having a credit balance, what we are supposed to do if there is an increase in the liability, what we are supposed to do if there is a decrease in liability? Let's understand here. As liability is the second component, it is recorded on which side? Credit side. So that is the reason liability is having credit balance. If there is an increase if there is an increase, it should be recorded on which side, sir? Credit side, same side, yes or no? If there is an increase, if there is an increase in the liability side, it should be recorded on which side, sir? Same side. That is nothing but which side? Credit side. If there is a decrease in the liability, it should be recorded on which side, sir? Opposite side. If there is an increase, same side. If there is a decrease, opposite side. This opposite side of credit balance, this opposite side of credit balance is nothing but debit. Now, if there is an increase, it should be recorded. If there is an increase in the debit side, if there is an increase in the debit balance, it should be recorded on debit side. If there is a decrease in the debit side, it should be recorded, debit balance, it should be recorded on the credit side. If there is an increase in the credit balance, it should be recorded on credit side. If there is a decrease in the credit balance, it should be recorded on the debit side. Let's continue. Now, let's continue. Sir, what balance would expense and income would be having? Let's understand here. So before understanding your expense and income, so we are supposed to understand the effect of an important component, that is nothing but your capital. So if we understand what happens with your capital, these two are easy. Okay, as these two are related to this, so if we understand the capital, these two are easy. Now, capital, sir, what is capital, sir? Capital is nothing but a loan. A loan is nothing but a liability. A liability has which balance? Credit balance. So your capital would also be having the credit balance. Yes or no? As a capital is nothing but a liability to the business. As capital is the liability to the business, as a liability represents a credit balance, your capital also represents a credit balance. That is the reason capital is nothing but a credit balance. Okay, now let's continue. So after reducing these expenses, we are having a 15,000 rupees of profit. Yes or no? After reducing the expenses, so you are having a 15,000 of profit which belongs to Mr. A. So this profit which the business earned need to be paid to Mr. A. Yes or no? So that means whenever you are having a profit, that amount as it belongs to Mr. A, so that means upon payment to Mr. A, the business is supposed to pay his capital plus profit of 15,000 rupees. So that means in the near future, upon payment of capital, are you supposed to pay this 1 lakh rupees or 1 lakh plus 1,15,000? How much are you supposed to pay, sir? 1,15,000, because this profit belongs to Mr. A. So that means whenever you are having a profit, your liability, was it increasing or decreasing? Was it increasing or decreasing, your liability? Your liability is increasing. Whenever there is a profit, as this profit need to be paid to the owner, in the near future, your liability, that means the business liability, is increasing. Yes or no? From the point of view of owner, as the profits belongs to Mr. Owner, his capital increases. Here, his capital, was it increasing or decreasing? Increasing. As capital represents credit balance, if it increases, it should be on which side? Credit side. So that is the reason, as profit is nothing but an income to the company, your incomes always would have the credit balance. Are you getting the logic? Let's understand one more. As profits of the business belongs to Mr. A, that is owner, So whenever you're having the profits in the business, your liability, that is the liability, that is your loan or your capital increases because you're supposed to pay in the future. So upon repayment to Mr. A, you're not going to pay only capital. You're going to pay your capital plus profits. That means your capital is increasing because of the profit. So this profit is nothing but an income to the company. So that is the reason upon profits, as the capital is increasing, the capital is having a credit balance. So your credit balance is increasing. Your credit balance is increasing. So that is the reason your incomes would always have the credit balance. Yes or no? From the point of view of owner, as these profits belongs to the owner, so upon profits, as the capital increases, as capital represents credit balance, that means increase in the credit balance, so you're having a credit side, that is your incomes always represents a credit balance from the point of view of owner. Now, so same as your profits, let's say we are having a loss of 10,000 rupees. Let us assume you are having a loss. Let us assume you are having a loss of 10,000 rupees. So as the business is having a loss of 10,000 rupees, whose loss is it? Was it the loss of business or was it the loss of Mr. Owner? This loss need to be paid by whom? The owner. So that is the reason upon repayment to the owner, you are not going to pay only capital. You are going to pay the capital minus loss. Yes or no? You are not going to pay this 1 lakh rupees. You are going to pay 1 lakh minus 10,000 of loss. That means in the near future, upon repayment to Mr. Owner, you are not going to pay 1 lakh rupees, but you are going to pay only 90,000 rupees, because this 10,000 rupees of loss belongs to Mr. A. That means Mr. A need to bear this loss. Yes or no? Now, so whenever there is a loss, your capital, was it increasing or decreasing? Whenever there is a loss, was your capital increasing or decreasing? Decreasing. Your capital increasing or decreasing? Decreasing. So that means whenever your capital increases, it should be credited. Whenever your capital, as it represents credit balance, a decrease in the credit balance, it need to be debited. So that means whenever there is a loss or decrease in the capital, it need to be debited. Yes or no? Whenever there is a profit, as a capital increases, it need to be credited. Whenever there is a loss, as a capital decreases, it need to be debited. So now, expenses is nothing but your loss. Your expenses includes your loss. As expenses includes your loss, when there is a loss, as your capital decreases, it should be debited. Your loss is nothing but an expense. Yes or no? So as your expenses includes your loss, when there is an expense, the expense always represents a debit balance from the point of view of the owner. So now, what are the components or what are the elements of accounts are? Asset, liability, capital, expenses and incomes. We know the logic behind these, why these are debited, why these are credited. Yes or no? So these two are important from the point of view of capital. Yes or no? Because whenever there is an expense, that is a loss, it reduces your liability. So whenever it reduces your liability, as liability represents credit balance, if it reduces your liability, it should be debited. So that is the reason your expenses would always have a debit balance. When there is an income or when there is a profit, as your capital increases, when there is a profit, your capital increases, because this capital we are supposed to pay it to the owner. As the capital increases, the capital represents a credit balance. So credit balance, if there is an increase, it should be credited. That is the reason your incomes would always have a credit balance. So this is about your double entry system, where you are having a debit is equals to credit. That means debit balance is equals to credit balance. If there is an increase in the debit balance, it should be debited. Where there is a decrease in the debit balance, it should be credited. When there is an increase in the credit balance, it should be credited. When there is a decrease in the credit balance, it should be debited. So this is about your double entry system. I hope you all understood. Thank you very much.